Here are 3 news items from the world of the crypto industry. First news. Cardano, short-term bearish bias hinders recovery. The price of Cardano meets several conditions necessary for a recovery to begin, but the chances of a successful rise are low. Cardano holders are not showing activity, as indicated by the on-chain network participation metric. This creates a divergence between interest in the asset and its price dynamics. Cardano's price is in a state of uncertainty. On the one hand, the on-chain market value to realized value ratio metric indicates a potential for accumulation. This indicator assesses investors' profits and losses. Currently, the 7-day MVRV ratio stands at -12%. This indicates losses and may lead to increased buying pressure. Historically, the MVRV ADA value in the range of -6% to -18% usually signals the beginning of growth, marking an accumulation opportunity zone. On the other hand, the low network activity participation rate sends a contrary sell signal. This is particularly evident from the divergence indicator between price and the daily active addresses transacting on the network. Divergence occurs when the cryptocurrency price and the DAA indicator move inconsistently. This suggests a potential mismatch between market valuation and network usage. Such a situation implies that there is not enough activity in the market to support a quick price recovery. The lack of active participation may mean traders are hesitant to re-enter the market. They may be expecting further declines or are uncertain about the price direction. Typically, this leads to a period of consolidation as the market seeks stability. Recently, Cardano's price failed to make a bullish breakout from a symmetrical triangle. Instead, it dropped to 40 cents, demonstrating a bearish reversal. This event has raised concerns among investors and analysts who were counting on a successful bullish breakout. Now, ADA is more likely to fluctuate between 43 cents and 40 cents. Additionally, if the altcoin does not bounce off the 40 cents mark, it may drop even lower. In this case, the price will set a 6-month low, falling to 38 cents, invalidating the bullish scenario. Second news. Crypto funds lost $600 million. Last week, from June 10th to June 14th, a total of $600 million was withdrawn from cryptocurrency-based investment products. After 5 weeks of continuous inflows into cryptocurrency funds, the positive trend was interrupted. The latest outflow of $600 million was the largest since March this year, analysts at CoinShares noted. According to experts, the negative trend is related to the meeting of the U.S. Federal Open Market Committee. Investors reduced their holdings in fixed supply assets, leading to capital outflows. Against this backdrop, the total volume of assets under management decreased from $100 billion to $94 billion over the week. Meanwhile, trading volumes for the same period fell to $11 billion. The average weekly figure this year is $22 billion. Regionally, the main outflow was from U.S. crypto funds, $565 million. However, not the most positive sentiments were observed in Canada, Switzerland, and Sweden. Only Germany received an inflow of $17 million. The leaders in outflows were Bitcoin-based products, losing $621 million last week. Funds focused on a wide range of altcoins fared better. Ethereum-based products received the largest capital inflow, $13 million. They were followed by Lido and Ripple, which accounted for $2 million and $1 million, respectively. Third news. Ethereum holders accumulate asset in anticipation of profit. The price of Ethereum may rise, as indicated by the actions of investors who continue to accumulate the asset. Despite Ethereum's bullish prospects, the big question is how far this potential growth can go before ETH halts. The price may soon start to rise as ETH holders continue to accumulate the asset. The net exchange position change shows that capital outflows have dominated the market since the beginning of the month. Over the past 3 weeks, more than 1.1 million ETH worth over $3 billion has been withdrawn. Outflows here do not mean money is leaving the market but rather ETH is being withdrawn from exchange wallets. This is a good sign as it means one of two things: investors are either buying ETH off exchange or transferring their assets to cold wallets. Since the market is not entirely bearish, the first scenario is more likely. However, the question remains as to how far potential growth can go. Judging by the overall profitability ratio, any ETH growth will be short-term. This is because more than 90% of token supply is already profitable. Crossing the 95% mark will signal the formation of a market top. A market top indicates the maximum price level reached by an asset before a decline or correction begins. This suggests a potential change in the bullish trend and predicts a possible price drop. Therefore, ETH may continue to rise until it reaches this threshold. Ethereum's price is attempting to turn the 50% Fibonacci level at $3,582 into a foundational support level. This would allow ETH to start recovering and recoup recently lost points. Investor optimism may push the price above this resistance, towards $3,700. Ideally, this would allow the price to reach $3,830, corresponding to the 61.8% Fibonacci level. However, failing to secure the $3,582 level as support will hinder Ethereum's growth. In this case, the likely outcome will be a gradual price decline to the 38.2% Fibonacci level at $3,336. Losing this support will completely invalidate the bullish scenario.